Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates. 10-year note yields extend the move higher to hit almost a 5-year high, or nearing those 5-year highs, 288 the 10-year note. Only to reverse very quickly, saw 10-year note yields plummet. Basically, treasuries across the board saw yields plummet as equity markets fell apart, and sort of was a reactionary trade. The yield trade, the price trade in treasuries seemed very reactionary to what was going on in equities, and that's pretty much been the case over the last several years. The rest of the market's kind of waiting for stocks to make their move, although it has always been an up move in stocks. Then how will the other commodities react? Well, today we saw treasuries react, and there were buyers in, but not in full force, not with both hands. I think that this could be more of a wait and see type mode for the treasury market, which wants to know if this is a knee-jerk reaction lower in equities. Is this going to be more of a permanent sell-off where we kind of find a new home? Or is this going to be just literally a bounce, because we saw how many 400 and some up days in the equities? We've seen 3 in a row, and everybody's breaking out the panic hats. So I think the market is too smart for that. I also think the market will wait and see what happens when the dust settles, and the dust certainly has not settled. And market volatility, while it was screaming higher in the equity markets, we saw the VIX up almost 100%. In the Treasury side, it wasn't as high. Yes, we saw volatility trade higher. Yes, we saw demand for calls come back, and yes, we do kind of have a little bit of angst, priced into options as well as into Treasuries. However, not seeing it reflected in the point of fear and sort of that, oh my gosh, get me out or get me in, I have to do this level. And I think treasuries right now, like I said, are biding their time for what is to come. And what is to come? Well, we amidst all this selling in equities and buying in treasuries, we did bring about a new Fed chair, sworn a new Fed chair today. Jerome Powell became the new Federal Reserve chairman. What a first day he had, with the Dow down something like 1,400 points at one point, and Treasury yields screaming lower and volatility higher, something we haven't seen in any market over the last several years. But I think that right now, what does he have to look forward to? Well, he's going to give a semi-annual testimony to the Congress, probably the 3rd week of February. They've yet to schedule that, but I think that what he is going to be tasked with is, one, how does the Fed feel about the volatility coming back to the market? I think a new Fed chair brings new volatility. It's pretty obvious. You've got pretty much the second most powerful person in the world, new guy coming in. So yes, the market's going to be a little bit on edge, but how is he going to deal with not only with equities, not only with Treasury yields being still historically low, but those yield curves still being stubbornly flat, despite the fact that we have seen a modest uptick. So I think that the Fed still has its hands full. How many rate hikes could they get into this year? I think that could be obviously be a big effect on Treasuries. Likewise, how aggressively will they look to continue to pare their balance sheet if they want to stay on that path? And lastly, what will they do if, the what if question, what if things go south? What if stocks don't? And how will Powell react to that? Will he be another sort of Greenspan put, or will he be someone else? And I think that he wants to be someone else, but we'll have to wait and see. The market volatility will come down over time, but it all boils down to, how does the new Fed chair fit into this big puzzle? And right now it seems he's going to continue on Ms. Yellen's trend, which is raising rates 2 to 3 times this year, continuing to pare the balance sheet, and trying to talk those curves steeper, which they haven't been able to do for some time. So right now, Treasury yields on a downtrend, prices higher, but it probably will not be for a sustained period. We'll probably see things reverse slowly back as equities recover.